Okay guys, I'll be very quick. Let me tell you something about the candlestick pattern that no one talks about in real, and you only get to know this after experience of a market, and the market makes you experience that. And then you have seen the theories of like smart money concepts or the inner circle trader concept, ICT concepts with the very complicated names. Let me break it down in simple terms in the shortest way possible. So this is the weekly chart for the Bitcoin, and I'm going to mark this high of the previous week and this low of the previous week. So I'm going to tell you actually how to trade a weekly range. So number one thing, whenever there's a candlestick formed in the higher time frame, you should know one thing very clearly that candlestick is actually a range that is formed in the shorter time frame. For example, this is the weekly candle, and I'll just draw this box uh, here. And now if I go to the daily, so this weekly candle actually is wait a second, the box is not, this is the box. So this weekly candle is actually the combination of 7 daily candles. Now if I go to the 4 hour time frame further down, breaking it down, and you see this range forming up. So this was the start of the week. This is the start of the week. Okay, so the week started, it created uh, some bullish types of candles, and it created a high. It created a high on Tuesday. On Tuesday, we saw a high, and then after Tuesday, what we see is we saw a low, and on Wednesday, we saw a green candle and then a red candle. So if the first 2 days on Tuesday, mostly on Tuesdays, mostly on Mondays, we'll see the range limit of that weekly the range in the shorter time frame. I'm using 4 hour time frame. You can just grab the concept and you can back test it on the chart. And now the previous high close is this. So we have a decent range over here, and then we need to wait. We were waiting for it, we were waiting for it. We saw a wick down here, and then we saw a retest. Then the range is going up, the range is going down. As soon as, so we have a close below this. As soon as we have a close below that, when the previous wick is filled here, so now we should be waiting for a candle that would close inside a range with momentum. So this is a candle that is close inside the range with momentum. You can see it. And furthermore, this is also a bullish engulfing candle. So candlestick patterns. So whatever video I see on on YouTube, they are going to show you the doji do this, bullish engulfing candle does this, and a bearish engulfing candle does this. Every candlestick pattern works, but where it works. So after this range, when you see a bullish engulfing candle, that was such a nice setup that you could have after the close, you could have gone long, you could have taken the stop loss below this start of the candle, and you could easily see a win rate of it's 1.73. You can trail the stop loss after that formation of the single candle, and you can trail it here. Fine. So this can be a setup. This can be a setup. The invalidation. Okay, so stop loss. Stop loss. The market is manipulated. We may see many wicks. You seeing it right here. You see a wick here. The liquidity grab. You see a wick here. You see a wick here. You see a wick here. So we have almost so many wicks. And these wicks are actually to generate liquidity. You may call it stop loss hunting, you may call it any name which you like, but it is actually to generate liquidity. So your invalidation should always be on the candle closes. Candle closes are the most important thing. Okay. So after this bullish engulfing candle, what we saw, this was a range high. We saw a great move. What was this range high? This was should be have been the target 2.75%, and then we should wait for a confirmation. Is this a confirmation? Now look, is this a confirmation? No, it is not a confirmation. But is this a confirmation? Yeah, it is a bearish engulfing candle. The candle is closing below inside the range, and it is showing a bearish engulfing candle. So simple move, simple move. You could have done this. It's 1:2 ratio scalp. That was so easy for you. Now, if I would have been there, I wouldn't go on this candlestick. Why? Because the RR is not good. Even if I go there, so like previously I've shown you, if I take my stop loss here, and if I take my take profit here, the risk to reward ratio in 1.15%, one ratio to 1.5, I wouldn't be going inside this trade. But this is a good. It is one almost 1 to 2 ratio risk to reward ratio, and this was a good trade to follow. So whenever you're placing a trade, you're using indicators, you're using price action. Okay, everything is fine, but at least try to mark Monday ranges. Uh, Try always marking the previous weekly highs and lows, and the next week when the candle is forming, remember, candle does not form. Bullish candle does not form like this. Let me make it green. It is never like this. It's never like this. It is always going down, creating a wick below, and then going up. So that ICT concept of power, oh my god, wait a second, power of 3, which basically is accumulation, manipulation, and distribution. So people have been doing this accumulation, manipulation, and distribution on very wide ranges. They use sessions, but the easiest way, if you are a beginner, to see this, if a candle, if you're bullish on a price and the candle is starting a 4-hour candle or daily candle or a weekly candle starting red, it is a good sign, because the candle always uh, closes opposite most of the time. 80% of the times candle always closes to the opposite side on which it is actually moving initially. So this is something which you should know about the candlestick pattern. So for the uh, for the basic part, it is it actually doesn't you don't need to remember or see those doji candles or those many candlestick patterns that you have been seeing. You should know it a bit, but it is never that you cannot make a strategy out of it unless and until you understand this concepts that every candle is a range. Every candle is a range. You see this monthly candle now. This is a monthly candle. We are close to the month's end. What is this wick? Let me remove the drawings. Now, what is this wick? This wick? This wick tells us that initially that candle actually went up a bit. The candle was green. On this month of Feb, the candle was green and now it's again red. So what is telling you why that wick happened? It actually that was the manipulation. So and candle closes are important. Now, if this monthly close goes below this line, closes below this, below the previous uh, candle's low, would you be going for longs? Would you be buying? No, you wouldn't be. You would be finding selling opportunities on the lower time frame. That is where you set your bias. So this is something which has helped me and which has it took me almost like 1.5 years after I came into the market to actually realize what's happening on the chart. And you may read many theories and everything, but this is something which is I've tried to explain you in the most basic manner. So if you have any questions, do write on the comments. I'll be giving many of the more clear lessons that are very simple. I won't be using many high sounding words, but I'll be trying to keep it simple. The charts are simple, and you can obviously predict the chart to the best way possible if you cut out your emotional side. I'll be also uploading the videos on this on psychology part, how you can do it, and that's super easy. People complicate it very much. So thank you so much. I'll see you in the next video.